Welcome to Why Voices. It's just good to be back in the house again. We got a very interesting topic that we want to talk about today. Staying the course. Many times young adults get knocked off balance when it comes to investing because they see the market go down, and the next thing you know, they clicking the button and losing money. But today we're going to talk about, staying the course, the power of consistency and persistency. Yeah, what do you think about that?
Man, consistency and persistency will get you through a lot of situations in the stock market, especially when you think everything's you finna lose all your money. That's usually the time when you should reinvest even more so you can get a bigger profit.
Yeah, it's kind of strange, because we work hard for our money. Sometimes we're working hard, every day, and we invest a little bit from this paycheck, and then we finally start learning how to pay ourselves first. We decide to start investing in the market, and at first it feels amazing. Your portfolio is growing, your confidence is high, and then you start thinking, wow, how easy this is, and then all of a sudden, you know, the president of the United States will say something and the stock market crash. What do you think about that?
Man, when they do stuff like that, that's usually only temporary. But some people don't know that it's only temporary. They see that first big bull, and they see that first big bear, and then they like, oh no, I gotta take my money out. I gotta take my money out before I lose it all.
Yeah,
I like no.
that's time. That's the time when the market goes down. Really, the time to buy. So as young investors, we got to learn. Keep some of that, put some of that money to the side. So when these market crashes come, you're in position to buy low. That's the whole name of the game: is buy low, sell high. Yeah, this is the moment that separates, short-term traders from long-term investors. This is where consistency and persistency become your greatest ally. What you think?
Man, I do. Just what people don't understand is that the stock market is a living, breathing organism. It moves up, it moves down, but sometimes it moves in ways that make no sense at all. And people don't understand that. But here's the truth. Over the last century, the stock market has been faced with wars, recession, pandemics, and political crises and financial crashes. And yet, despite all that, it has always recovered and grown over time. That shows you that consistency means showing up for your investments regularly, no matter what the headline says. Because once you invest when everything's going bad, when it goes up, you get your return bigger and tenfold.
Yeah, I like that, man. I like that, and then a lot of times people don't understand. Sometimes the market, it goes up and it goes down. But what about the time when the market is going sideways? It's just not really doing nothing. It just, it's going up a little bit, down a little bit, but it's just going sideways. You know what I mean? I think that's the time, that's really the time that as young investors we need to be spending that time doing research on other companies, looking into, for instance, I think we talked about it last week, Exxon, oil and gas, and
Chevron.
Chevron, different types of companies like that, because sometimes, you get tied up in just concentrating on tech stocks, and tech has been booming for 6 months, but then all of a sudden the game changes, and now oil and gas is getting ready to start booming. So, we have to learn how to be flexible as young adults when we get into this investment game.
Indeed.
Yeah. Well, we just want to say a little bit to you guys today. If you like this type of video, please subscribe and hit the like button. It helps our algorithm, uh, but we're gonna be bringing you guys more information. But today's topic was persistency
And consistency.
and consistency. You got anything else you want to say?
We much covered it all.
All right, then. We talk to you guys soon.